Hello and welcome back to Chart Pattern Trading Masterclass by Wealth Education. In this video, we'll talk about mastering momentum indicators. So, there is a term called momentum, which traders use quite a bit, and momentum just means exactly what you think it would. Whether the market is going sideways or if it has true momentum, up or down, it really doesn't matter. Both have momentum. And you have to ask yourself, um, is the market so, like, for example, there is bullish momentum longer term on this US dollar South African rand chart. There's bearish momentum to the downside um, over the last week or so. And with that being the case, you need to understand momentum and whether or not the market's actually moving in one direction or the other. There are indicators that people will use. There's a couple of really common ones called MACD, moving average convergence divergence, and the RSI, which is relative strength index. There is a and put on relative strength index. So there is a purple line here that pops out or below the range here that is marked between 30 and 70. And the idea is that anytime you see it pop above, the market's overbought, perhaps due for a pullback. When you see it break below, it's oversold, perhaps it's due for a bounce. Now, some people use the purple line, which is just the usual purple line. Some people use the RSI based moving averages. For the simplicity, we're just going to use the actual RSI line itself. That's how most people actually use it. So just be aware you may have to go into the settings and get rid of that moving average on your TradingView platform if you choose to use the RSI. So, anyways, that being said, you can see that we had broken down below the range of normalcy, if you will, into an oversold condition as the dollar fell against the rand and ended up doing that. We touched this right here and then pulled back. Now, notice we did rally from here and we didn't go into the oversold condition. That does happen. I mean, it doesn't mean that it absolutely has to happen for the market to turn around. It just gives you an idea of when things may have gotten a little too far ahead of themselves. So, like right here, you can see the market was overbought. Now, I will put the moving average convergence divergence indicator on, and it works in a similar set of circumstances. You've got a zero line, just like right in the middle here. You get a histogram and you get moving averages. So when the moving averages are well above and then they cross, it suggests an overbought condition. Notice it's right about the same time as the RSI did, maybe a couple candles later. We crossed here, but we weren't into an oversold condition. And the main reason I have both of these on at the same time is a lot of people will use them simultaneously. Oversold condition in the MACD, and then the moving averages crossed. When they cross like that and start heading in the other direction, that's typically a signal. So that would have been a really strong buy signal. There is something called divergence that people pay close attention to. So divergence is just simply when price is going one way and the momentum indicator is going in the opposite. So, for example, if price is continuing to rise, but notice how, so like here, price was rising. Notice how momentum was dropping. So your RSI and your moving averages were dropping. A lot of times, this is where the histogram in MACD comes into. A lot of times, people use the histogram as a sign of momentum slowing down. So the histogram is a representation of how far apart the moving averages are. So the wider apart they are, the bigger the histogram gets. Notice here, price is rising, histogram's shrinking, and then you do in fact get a bit of a pullback. It's not a massive divergence, but little hints like that can give you a bit of a heads up. Let's go ahead and go into the crypto world here. We'll do Solana. So overbought condition right there, you started selling. Notice how price was rising rapidly. The histogram was dropping. That would have been a little bit of divergence. Let's add the RSI back on. You can see we were definitely overbought there. Kind of drifted over and started falling. Oversold condition right here led to a short-term buying opportunity. Notice though that the moving averages didn't actually cross again until here once we got into the normalcy. So that shows you a little bit of a lack of momentum. And that's exactly what happened, which kind of sputtered out. Overbought just before it. So what you should notice is that we were peaking right here in the RSI, but the histogram and the RSI started to drop while we went higher for the next couple of candlesticks in Solana. And finally, let's go over the stock market and see if we can find an example here. Let's do AMD. So I see a pretty significant divergence. Price is going higher right there. Notice how the histogram is dropping and the RSI are dropping after being in an overbought condition. Well, that tells you that you are A, overbought, and B, running out of momentum. So these indicators can give you a bit of a heads up as to, when momentum's running out or when it's due to flip in the other direction. Conversely, you're in an uptrend like this. Notice how the RSI and the MACD are pretty quiet. That's actually good news, especially in the stock market, because volatility tends to be a killer for price. So in the next video, we'll take a look at mastering volume analysis.